Hi, welcome to Market Alert for Wednesday, the 29th of July. So gold gained yesterday as stocks move lower on football games that have been paused and fading stimulus hopes. So we'll see, because it's an interesting one today. We've got the FOMC statement later on this evening, so the afternoon could be quiet, just as a heads up while the market waits for this. Very much doubt we'll get any change on the interest rates, but you never know in these mad times what could happen with regards to this. There's nothing for the morning for the German DAX, so you can see there it's all afternoon and evening as far as economic news is concerned. So let's have a look at yesterday's trades. The DAX started off trying to move lower, but failed because you can see the buying inside of the red bars there. There was some selling here, but the market came off the lows and the volume was less as well. So whatever activity was there had sort of started to dissipate. And then the market moved sharply higher, and again we had red inside of the green bars, also through the 200, also through the high, but you can see here we've got a lot of selling pressure and then more potential weakness, and this became an interesting area for this market a bit later on in the morning. So prices go back through the 200 MA there, and we have a potential signal there. You can see you've got very high volume as well. And the only reason this hasn't highlighted as red in the volume is because of the way the market opened and closed in this bar. Didn't quite meet the criteria. So in order to be successful, the market's got to drive through the close, the BRN, and the first profit target. And of course, we saw buying down at this level as well. So these are the points that you would be looking out for. So the market moved lower, and again you can see we've just got through the 12,880 level. These are things that I mark up as the trade unfolds. And importantly, of course, we've got our friend down here, the DP, which is always acts as a bit of a magnet for prices. And what's happening here, and why I didn't take get out of the trade at this point, we had some potential buying coming, but it was only because of the DP. The market likes to go and have a look at this level before it reverses, so it was worth just waiting to see if prices would move lower. They started to, and then they're starting to come back, so now it's a case of having the stop at break even, and you've got the BRN and the close there, as well as a resistance level if prices start to come back. So eventually prices do trade down to the DP. They just go down, give it a kiss, and then start to move back. Now watch the volume in this bar at the DP level. Again, now we've got the second green bar, and we've hit the primary objective here of the DP level. And the market has got a bit of volatility in it as well. But there's 100 points between here and here, which is good. It started to pick up, and then it's time to exit stage left, and the market then starts to move back to the upside. Then we have a potential buy signal as the market comes back. The volume already is lowish, as we can see there. And then we see this potential weakness coming into the market already. Now, we all already know over here we have a bit of a problem at this level. If the market can't drive through this with some more green bars, then we're going to see an issue. And that's exactly what we did do here. You'll see prices starting to come back. If they're closing back below the BRN and then the 5-bar moving average, which we can see here, then we know we have got some weakness around, and it's always a tough one, this, whether to actually stay with the trade or to get out. But here's another clue for you. The volume has dropped off. There's no interest there at the moment. Sometimes it's better just to take a few pips loss even if the market goes off after. But the choice has to be down to the individual, or just say, well, I'll keep the stop there and see what happens. Trading in percentages here anyway. But the market is trying to bounce off the 20 bar moving average, and then we see the bar turn red. There's no signal on this, so that would be enough to say let's get out and preserve the capital, certainly on the profits made in the down move there. And then that was it for the morning session. We'll just go through towards, I'm just a bit too fast there. So yeah, eventually the market came back down, had another look at the DP, and then bounced off the DP with no other signals. But the volatility was starting to pick up a bit. We just need more individual bar volatility, but we certainly got an increase in the range for yesterday, which is good. And then in the afternoon, you can see that, again, we started off with some selling there, but the market then finding support at the S1 and waiting for the consumer news, which you'll see as we just move forward there, somewhere around here. There you go. This came in at 92, forecast at 94, and then the market didn't really react to it. And what was interesting here, actually, which wasn't in yesterday morning's market alert, if I can just go back and find it. There we go. Is that they slipped this in here, this Fed announcement at 2:30. That wasn't in yesterday's news list, but they managed to put this one in. But fortunately, it didn't make a lot of difference to the market. Well, I say fortunately, it would have been useful to have known it, and it would have been great if they had made an announcement, because it would have given us a direction for the afternoon. Whereas, as you'll see here, as we go through, the market was directionless once more. But let me just highlight a couple of bars for you here. This one in particular, you can see how the market comes off the low, and there's a spike in the volume there just before the news. Then the market volume drops off as prices close back above the 5 bar moving average. We then turn green, and then we had a repetition yesterday afternoon as we had the previous day on the Monday session, and you'll see the market coming back and playing with the 5 bar and the 20 bar moving average. Prices trade up to the 200 MA, they struggle a bit there, and then they come back to the 5 bar, and again you can see how this is just coming back, having a look at these areas and then reversing off these and including the 200 MA, come back to the 20 bar moving average, and again, an interesting bar here. You can see the volume more or less the same as the previous bar, coming off the S1, the BRN. And then prices moving back to the upside once more. You'll see, again, just notice how it just absolutely like a magnet at those two averages there. And then I drew in these two highs just to see if the market would make it back to the recent high to the left there, which it did, until we had this potential weakness, and that was the end of the session. And then you can see the potential weakness again, indicating that this move was over to the upside for the time being. Now overnight, let's start off with the daily chart. Again, you can see the volatility picked up yesterday, which is great, and we're also starting to see the market below the 200 MA also as well. So overnight on a, let's move this way. This is the overnight. Just come back a second. Let me just narrow this down so we can see where we are, what targets we've got. There's a 28th, and then you can see the change in the pivots there to indicate where we came back on the overnight. So the market was fairly quiet, traded up to the DP in 200 and has traded below these, and as we drag over you'll see the market now detached from the 200 and the DP. So there's yesterday's low. You want to keep an eye on this when the market opens as well. See if there's support. As you've seen, there's already support there already. It's an interesting one in this very strong bull market. When prices get to the previous day's low, they tend to bounce off these areas. And then finally, talking of volatility, you can see that we're coiling down at this level here. Let me just change that to a different color. You can see there that we're in a sideways range, and this is probably likely to be the sort of new lows for the implied volatility. I don't think we're going to go and see the sort of pre-COVID levels that we had. This is more or less that sort of support and range now, given the change in the way the markets are sort of post-COVID. Again, it looks like things coiling in implied volatility. When it becomes in this sort of sideways coiling range, then the energy will get released from it in due course as well, which you can see there it's building up quite nicely, which is what we had before when it exploded. So there's going to be some really good trading opportunities going forward once we can either get through this sort of strange quietness, or I'll just bring the daily chart up once more. We can break these lows that we've seen here, and if we do, then we're heading down into these areas as well, which will be great, and we'll see the increase in volatility that we are looking for. Okay, I think that's it for today. Say the FOMC meeting this evening could have an impact that the markets may be stuck in a range, just in case there's a surprise announcement from the Fed later. But we'll see when things kick off in the next hour or so. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.